Joining me to discuss, Peter Morici, Veronica Dagher, and Ross Gerber. Peter, I got to go to you. You and I have talked recently about this economy. You think it's doing pretty well, but, I mean, the economy that Rosengren painted was like utopia.
Well, this is just another example of irresponsible and inept behavior on the Fed. He basically came out today to rattle financial markets, and he was quite successful. In reality, suppose they raise rates a quarter point, and a few more meetings later, another quarter point. The stock market can surely sustain a 1% federal funds rate. I mean, this is an absurd situation. People are overreacting, but the Fed has proven over and over again just simply inept in managing expectations.
But here's the thing, though, Veronica, because the easy way it's always explained, particularly by bears on TV, who've been waiting for this day, is that the market's afraid of a rate hike. I agree with Peter. I think the market can absorb it. But what I do think the market is afraid of is a Federal Reserve that doesn't know how to read the tea leaves, that can't put a finger in the air and see what's going on, that says that they're going to be held, that they're going to use data to make their decisions. Well, let's look at the data. Most recent jobs report was a dud. ISM numbers for manufacturing and non-manufacturing were duds. Second quarter GDP 1.1%. So what could Rosengren be seeing?
You know, that's the million-dollar question, trillion-dollar question. I think there's just so much uncertainty, and the market hates the uncertainty. And what we've heard from so many market participants, what concerns them so much about this Fed, is there's this wondering of what's the strategy, what's the end game, do they know what their strategy is? It seems to be such a divided Fed to begin with. That's very unsettling for investors. So they're saying, you know, what do we do? We're just waiting and seeing, but what is that data point that's really going to swing in the opposite direction?
Right. And there's no doubt that they've boxed themselves into a corner. They've printed up trillions of dollars of money that really hasn't moved the economic needle. But Ross, let me shift to you on this stock market. Down almost 400 Dow points today. The VIX, which is sort of a gauge on fear, 5 days up 46%. Investors are obviously calling you up. They want to know what to do. It's going to be a tough weekend for you. What are you thinking on Monday?
Well, I think that this is a big overreaction from Fed officials who should not be allowed to speak any longer. They're clearly irresponsible and incapable of creating confidence in their ability to make a smart decision. It's really amazing to me that the government goes out and hurts the same economy they want to do well with just their stupid comments. He hasn't been outside. There's plenty of room for this economy to improve. We have zero inflation. The 10 years at 1.67, which is what it was in the financial crisis. And this guy thinks the economy is like 100% great. And I do think the economy is improving, but let's keep it in perspective. We're at the beginning of the improvement, and we need to let this run for some time.
You know, though, Peter, again, the Federal Reserve has boxed itself into a corner, and perhaps they should stop talking. But what do they do ultimately? They're going to have to raise rates at some point. The market's going to have to deal with it. And of course, it's not just the Fed, but central banks around the world. What they've done, a lot of people think they've built the ultimate time bomb.
Well, I think central banks in Europe and in Japan are doing foolish things. Negative interest rates don't work, and they should back off. But as for the Fed, I believe we can start gradually increasing interest rates, but make it clear that it's very gradual and that it's an improving economy, but we're not at full employment, that we're not facing some sort of asset bubble like the entire asset market. And, you know, if you had a consistent narrative like that, instead of jerking back and forth, creating false expectations over and over again, you wouldn't have these panics.
You know, Veronica, the Fed has this dual mandate, which a lot of people believe is a mistake anyway. I don't think any other central bank has to be concerned with jobs, just inflation and the soundness of money. But having said that, they can see how many people have dropped out of the job market. They know that unemployment rate is a bogus number. They know that the real unemployment rate is a double-digit number, and they know that Americans aren't making as much as they were before. So when they start talking about inflation, there's no velocity of money. What are they looking at? What could possibly have this sudden sense of urgency that somehow we have an overheating economy?
I'm not sure what they're looking at, because if you talk to some of the people in various parts of America who haven't seen a raise, who are underemployed, who just dropped out of the workforce because they think they're better off sitting on the couch at home than going into the workforce and getting underpaid. You ask those people and they say, I don't see an improvement. My situation is actually worse than it was in 2008. I haven't seen a raise, but my health care costs have gone up, my living costs have gone up, and things are tough for me and my family. So if you ask those people, I'm not really sure what they're looking at. It's a puzzle for them. They're trying to figure it out. We'll see what happens. If they do raise, it's going to be slowly. Most people are saying probably not September, though.
Yeah, no, September, but it has, though, if you look at the market, though, Ross, September for a lot more people today, obviously opposed to yesterday, think it's in play. Let's talk about the market, though, with or without the Fed, though, Ross. You know, it's a little extended based on historic norms and your traditional valuation metrics like PE ratios, particularly trailing PE ratios. Top-line growth has been anemic, almost non-existent. I think we barely got there this quarter. Profits, in large part, also manipulated because of all these buybacks. How does the market justify going higher from here?
Well, a lot of the decline we've seen in earnings was related to energy companies, and we're going to start seeing those earnings start coming back. So a lot of the increase we're going to see in the markets are going to be more sector-related than overall market-related, and we really like the energy sector right now. I think that there's a lot of opportunity here because as earnings normalize for these energy companies and they start reporting huge losses, we're actually going to see a jump in S&P earnings next year over this year. So it does justify current multiples if we can continue with low rates and the current projections for earnings. So we do think there's areas of the markets that are attractive, but you got to be a stock picker here. You can't just buy the S&P.
Yeah, I know. Most people aren't. Peter, I want to ask you quickly. We came into the week, Donald Trump last weekend talked about this false economy, the role of the Federal Reserve. I know you're a big Donald Trump fan. Are you concerned that what we saw today actually is an example of what he's warning about?
Well, absolutely. How can you manage the economy as President of the United States if you've got a herd of cats just running in all directions at the Fed and cats that people will listen to? That's the basic problem. My feeling is the stock market will improve. We can justify higher valuations. I've written about that, and that we'll get through this. But the Fed will likely give us a preview in September of a December rate increase.
All right, a room of long-tailed cats, a room of rocking chairs with long-tailed cats. All right, guys, thank you all very much. Have a great weekend.